Hello, and welcome back to the channel. I'm Overbought, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Rsi Zone Reversal. This strategy blends two classic building blocks, support and resistance zones, and the relative strength index, commonly known as RSI. It's a mean reversion approach that looks to fade price when it pushes into a structural extreme and shows signs of exhaustion. Over the next few minutes, we'll explore how it maps the market, the exact conditions it watches for, the actual code behind it, and a step-by-step chart walkthrough. Remember, everything here is educational information only. Let's get into it. So what does this expert advisor actually do? At its heart, Rsi Zone Reversal is a mean reversion strategy. Instead of chasing trends, it waits for price to stretch to the outer edges of its recent range and then looks for that stretch to fade. The idea is built on a simple observation that many traders study. Markets often probe a level, run out of energy, and snap back toward the middle of their range. This approach tries to recognize that moment in a structured, rule-based way. It works on a single time frame and runs on whatever chart and time frame you attach it to. Two ingredients drive every decision. The first is structure. The strategy looks back over a window of recent bars, set by the ZoneLookback parameter with a default of 20, and from that window, it builds a support floor at the lowest low and a resistance ceiling at the highest high. The second ingredient is momentum, measured by the RSI indicator, with a default period of 14. RSI helps the strategy judge whether a move into one of those zones is arriving with exhaustion rather than fresh strength. Volatility matters too. An average true range, or ATR, calculation with a default period of 14 sizes the zone tolerance, the stop loss, and the take profit, so the strategy adapts to calmer or busier conditions rather than using fixed distances. What type of trader might find this educational to study? Anyone interested in counter-trend or range trading ideas. Anyone who likes the discipline of waiting for confirmation before acting, and anyone curious about how support, resistance, RSI, and ATR can be combined into a single automated rule set. It opens only one position at a time per magic number, and it evaluates its rules once per closed bar rather than on every tick, which keeps the logic clean and repeatable. As always, this is for learning purposes, and trading carries real risk, including the risk of loss. Let's walk through the logic step by step. Every time a bar closes, the strategy refreshes its picture of the market. It first checks that enough history exists, then it reads the RSI value and the ATR value on the just closed bar. If ATR is not positive, it simply waits, because every distance it uses depends on that volatility reading. Next, it builds the zones. Looking at the window of bars before the signal bar, it records the highest high as resistance and the lowest low as support. Importantly, it uses the bars before the signal bar, so the candle being judged does not get to define its own level. This keeps the test honest. Now for the entries. A long setup needs four things to line up at once. First, the signal candle's low must probe into the support area, reaching at or below the support floor, plus a small tolerance. That tolerance is the ZoneTolAtr parameter, a default of 0.25, multiplied by ATR. Second, the candle must close back above the support floor, showing the probe was rejected. Third, the candle must be bullish, meaning it closes higher than it opened. And fourth, RSI must be at or below the oversold threshold with a default of 30. When all four agree, the strategy signals a buy at the ask price. A short setup is the mirror image. The signal candle's high must probe into the resistance area, reaching at or above the resistance ceiling minus the tolerance. The candle must close back below the resistance ceiling. It must be bearish, closing lower than it opened. And RSI must be at or above the Overbought threshold, with a default of 70. When those align, the strategy signals a sell at the bid price. Exits are handled entirely by the stop loss and take profit attached to each order, both expressed in ATR multiples. On a long, the stop sits below entry by the SlAtrMult value, a default of 1.5 times ATR, and the target sits above entry by the TpAtrMult value, a default of 2 times ATR. On a short, those distances flip to the other side. With the default settings, that's a reward to risk of roughly 1 1/3 to 1. Because only one position runs at a time, The strategy stays focused on a single idea until it resolves. Let's read through the code as it appears in MetaEditor. At the top are the inputs you can adjust. RsiPeriod sets the RSI length at 14, while Oversold and Overbought set the momentum thresholds at 30 and 70. ZoneLookback, defaulting to 20, controls how many bars build the support and resistance levels, and ZoneTolAtr defines the zone tolerance as a fraction of ATR. ATR-period, SlAtrMult, and TpAtrMult shape volatility, the stop, and the target, and lots sets the order size. Below that, the variable toll scales the tolerance by the current ATR. Now look at the long block. The Boolean long setup is true only when the signal candle's low has probed into support. Its close is back above the support floor. The close is greater than the open, so the candle is bullish, and RSI is at or below the oversold level. When all of that is true, the code reads the ask price, places the stop below entry at SlAtrMult times ATR, sets the target above entry at TpAtrMult times ATR, and calls trade.buy. The short block is the exact mirror. The Boolean short setup is true when the candle's high probed into resistance. The close is back below the resistance ceiling. The close is below the open, so the candle is bearish, and RSI is at or above overbought. The code then reads the bid price, places the stop above entry, sets the target below entry, and calls trade.sell. Both sides share the same structure, simply flipped. Let's bring the logic to life on this chart. Across the top in red, we have the resistance ceiling at 1.0890, and along the bottom in green, we have the support floor at 1.0820. Below the price, the gold line is the RSI, with the overbought level at 70 and the oversold level at 30 marked by dashed lines. Watch the opening candles. Price swings between the edges of the range, tapping near the resistance ceiling and then sliding lower. As it does, notice the RSI in the panel below beginning to roll over and fall. The strategy has already mapped the support and resistance from this recent swing window, so it now has its structure in place. Now follow price as it drifts down toward the support floor. With each lower candle, the RSI keeps dropping, sinking below 30 and pushing into the oversold zone shaded green at the bottom of the panel. This is the momentum exhaustion the strategy is waiting for. But momentum alone is not enough. It needs the price action to agree. Look at the buy entry marker. On that signal candle, the low pierces just beneath the support floor, probing into the zone, and yet the candle closes back above support and finishes higher than it opened, a bullish rejection. At that same moment, RSI is sitting in oversold territory below 30. All four conditions are now satisfied, so the strategy signals along. The stop loss is parked below the swing low at 1.5 times ATR, and the take profit target is set above entry at 2 times ATR, a reward to risk of roughly 1.33 to 1. From there, price lifts off the floor. The next candles build higher, the rejection holds, and price climbs steadily until it reaches the take profit target marker, where the long position closes. RSI, meanwhile, has recovered back toward the middle of its range. Now the second half of the story. Price keeps pressing higher, working its way up toward the resistance ceiling. In the panel below, RSI rises with it, climbing above 70 and entering the overbought zone shaded red. Once again, the strategy is watching for exhaustion at a structural extreme. Look at the sell entry marker. On this signal candle, the high pokes just above the resistance ceiling, probing into the zone, but the candle closes back below resistance and finishes lower than it opened, a bearish rejection. RSI is overbought, above 70, at the same time. The mirror image conditions are met, so the strategy signals a short. Now the stop sits above the swing high at 1.5 times ATR, and the take profit target is placed below entry at 2 times ATR. Price then rolls over and falls away from the ceiling, candle after candle, until it reaches the lower take profit target marker, where the short closes. Two trades, both faded at the edge of the range, both confirmed by RSI and a rejection candle. That is the rhythm this strategy looks for, illustrated here purely for education. And that brings us to the end of our look at Rsi Zone Reversal. We covered what the strategy is, how it builds support and resistance zones, how it uses RSI to judge momentum exhaustion, and how it waits for a rejection candle before signaling a long or a short. We read through the actual MQL5 code for both sides, and we walked candle by candle through a buy and a sell on the chart. Keep in mind that this video is educational information only and not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses do occur. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.